Hello everyone, welcome to our Crop Insurance 101 webinar from 2019 from the Center for Rural Affairs. My name is Anna Johnson. I'm a policy manager here at the Center for Rural Affairs, and I'll be presenting today. And before we get started, a little bit about who we are at the Center for Rural Affairs. We're a nonprofit organization with headquarters in Lyons, Nebraska, and an office in Nevada, Iowa. And we exist to create vibrant rural communities. We do this through three key strategies: small business training and lending, working with communities and farmers and ranchers, and then policy change. And we believe that a key piece of farm and ranch economic viability is strong risk management opportunities, and that's why we do this work on crop insurance. So let's get started. So our goals from this webinar today are to go over what is crop insurance and what does it do? And also we'll be talking about how to decide if crop insurance is right for your operation. So what is crop insurance and why do we buy it? It is insurance against farm loss. And why is that? We all know that farming is really risky. There are several different types of loss, from weather, from markets. Crop insurance helps with managing some of that risk because it allows you to protect against yield losses or price declines. Buying crop insurance allows producers to have protection against losses. So the general cycle with the way that works is producers purchase a policy, a crop insurance policy, at the beginning of the season, and they pay their premium. Then if they experience a loss that the policy covers, they can file a claim at the end of the season and receive an indemnity or payment. And another couple basics on crop insurance. Crop insurance offers protection on an annual basis. So it's assuming that this is of course assuming that you enroll and renew your policy annually and don't cancel it. Crop insurance also can help you access additional financial management tools. Many banks require proof of crop insurance in order to qualify for loans, so it's a good thing to be learning about what it is. And thanks for being on this webinar. I hope if you ever find that having crop insurance allows you to access a loan, give me a call. I really want to hear some of those stories. Crop insurance is different from farm liability insurance and also different from other forms of private insurance. And crop insurance policies are offered on a county basis. Not every policy is available in every county. When diving into crop insurance, it's good to know who the different entities are who are involved in it. The U.S. Department of Agriculture, or USDA, has an agency called the Risk Management Agency, and that is the agency that sets policy for crop insurance nationwide. And then there are 14 approved insurance providers, or AIPs. Some examples are American Farm Bureau and Farmers Mutual. There's a list online at the link. I'll post all the links later in a follow-up email, and then also we'll post it when we post the recording online. Then another important entity in the crop insurance world is individual crop insurance agents. And finally, farmer customers. So how do all these things fit together? So as I mentioned, USDA, RMA, they set policy that the approved insurance providers, those big companies, then have to follow when they sell crop insurance. Then those approved insurance providers work with individual insurance agents. And there are a whole lot of agents around the country. And then those agents are the folks that farmers and ranchers work with. Another important piece of this is that crop insurance is subsidized. USDA RMA subsidizes some of the work that the AIPs do, and then also farmer rancher crop insurance policies are subsidized by the federal government. So there's you end up paying a portion of your crop insurance premium because the other portion is subsidized. And just to flag again, there are insurance products available outside of this system, such as many forms of hail insurance, but we're going over the federally subsidized, federally offered crop insurance today. So an important piece of crop insurance is what kind of losses will it cover? So usually covered under most policies are natural causes such as drought, excessive moisture, hail, wind, frost, insects, disease. Sometimes covered, depending on your plan, is changes in price. Not covered includes damage from pesticide drift, fire, negligence, failure to follow what's called good farming practices, and others. The main takeaway here is that it depends on your plan. So make sure you understand, if you're buying a crop insurance policy, make sure you understand what losses it covers. Another detail in the covered causes of loss that I wanted to flag is prevent plant, which you may have heard about last year. There was a lot of talk in the news about it. What this is an early season loss when a crop is not planted on time, and it is available on some crop insurance policies. So thinking about who crop insurance is available to. Crop insurance is available to beginning farmers. If you've been farming up to 5 years, you count as a beginning farmer under crop insurance under most policies. And if you're a beginner, you have you're able to access a 10% premium bonus. So that's so you pay a smaller amount on your policy. Some of the fees for catastrophic risk protection, or CAT, also known as CAT, those fees are waived. And you can use production histories from a farm you were involved with, even if you're not currently farming there. So those are a couple of the special designations available for beginners. Organics. There's also some crop insurance pieces to be aware of if you're a certified organic producer. RMA offers more and more organic policies every year. Currently, there are 80 crops that have an organic option. Not each is available in every state and county. Coverage is also available for both certified organic acres and transitioning organic acres. And whole farm can also be used to cover revenue from certified organic crops. This is another crop insurance policy that we'll talk about a little bit later, and the policy that I'll be talking about in the webinars next week also. So if you have more questions about how whole farm revenue protection, WFRP, can be used to cover organic crops, tune in next week. So how does it work? How does crop insurance for organics work? A crop is eligible for an organic policy if there is an organic price election available for it from RMA. So you can check, if you have a question about a particular organic crop, you can check and look up the price election in an RMA tool called the Actuarial Information Browser. So here's a link. And organic coverage is also available under approved written agreements that you have to have in place with your agent. Another special consideration around crop insurance is how does it interact with conservation? One important piece to be aware of is conservation compliance. If you have highly erodible land or wetland on your operation, in order to purchase crop insurance, you are required to file a form with your local USDA Farm Service Agency office to certify you are not raising crops on that land and are following a conservation plan. And so this is required to be eligible for crop insurance premium subsidies, which is that portion of the crop insurance bill that the government pays. Your insurance agent can help you check to see if you're in compliance. Another piece to be aware of around conservation and crop insurance is around cover crops. Cover crops are now a fully accepted agronomic, quote-unquote, good farming practice under crop insurance. What that means is your planting cover crops will not interfere with your crop insurance coverage. You can read more at another one of these links that we'll share later. So, do I want crop insurance? What do I need to know? What do I need to think about? So if you're mulling over these questions, a couple of pointers is to think about how much risk you have on your operation. If there's a point in the year when your entire year's revenue is out in the field and vulnerable to weather events, that you might decide that you've got a pretty high level of risk and that crop insurance would be a good fit for you. Or alternatively, if you're managing several different pieces in your operation and your income and revenue are spread out throughout the year and across different crops and livestock, maybe that's your risk management plan, and crop insurance maybe wouldn't be as good of a fit. Obviously, it's never pleasant to consider the prospect of loss, but having a plan in place can give you peace of mind and also help you plan. So talking through the cycle, so if you were planning to apply, how would that look? When would you need to do it, and who would you need to talk to? So in the winter, this is, talking to our Midwest farmers. In the winter, you'd be gathering documents, meeting with insurance agents to develop your policy. There are 3 filing deadlines to, say with your crop insurance agent, yep, we are definitely going forward with this, buying this policy. This is what it says. There are 3 deadlines for doing that, January 15th, February 15th, and March 15th. Obviously, check with your agent to find out which one applies to you. March 15th is the most common one in the Midwest. Once you have that policy in place, in the spring and summer, is your coverage period. And there's also billing and reporting to your agent as needed. Then in the fall, if needed, you would be filing for a loss, potentially providing proof to the agent, and hopefully receiving an indemnity. And also in the fall is when RMA announces changes to the following year's policy. And obviously, hopefully in the fall you would not have any loss and you would have a great year. And feel free to jump in with any questions. One thing also to look into if you want to learn more about how crop insurance might work for, how purchasing a policy might work, is to look at RMA's document called Producer Obligations and Expectations. This is exactly what it sounds like. One of the so some of the things that would be required of you would be that you would report your acreage and any required protection accurately, that you would meet your policy deadlines, you would pay your premiums on time, and report losses immediately. And on the producer, or on the, what you can expect from your agent and from the crop insurance system, is that you would receive accurate answers to questions on types of coverage, prompt processing of your policy, and timely payments for covered losses. So feel free to check out that link also when we send it later. So another set of questions that folks who are looking at getting into crop insurance might have is around what crop insurance options are available in your county. So you can research this on a tool that's called the Actuarial Information Browser. It's a very catchy name. And through this, I've got a little screenshot of it below here. You can see there's a couple different fields: commodity year, insurance plan, state, county. And so you'd fill all of that out. And if an option's not available, it'll be pretty clear through that tool if you dig around in it. So here's another example of it. I filled in apples for 2019 under an APH program, and you can see in Iowa, when you go to drop down to select the county that you live in, there are only 3 counties where APH program policies are offered for apples in 2019. So just to illustrate that not all crop insurance policies are available everywhere currently. But what if there's no crop insurance policy in my county available for what I produce? So this goes back to what I mentioned earlier, whole farm revenue protection, and why we're going to be talking about it next week. And whole farm revenue protection is available in every county, in every state. And another thing to dig around in is RMA's Summary of Business Report Generator, which can if you're interested and have some free time on a cold day on the inside on your computer, you can dig around and see what are the most common policies to be purchased in your area, and what are all the different things that can get covered. It can be interesting to dig around in. For example, there's a picture of bees here because there is a policy that will cover bees. So another point on this is RMA, again, that's that branch of USDA. They have a process in place for you to submit a request that they add insurance for a particular crop. It is a pretty lengthy process, so just important to know that going in. But you can learn more at their link about requesting insurance. Okay, so another question. So I'm giving you lots of links, lots of different RMA tools and options and information, but brass tacks, how much is it really going to cost? So the cost is going to depend in part on the level of coverage that you select. Crop insurance coverage ranges from 50 to 85%, and then catastrophic, which I mentioned a couple times earlier, is also available for many crop insurance products. So for example, if you go for a 50% coverage level on your plan, that means that if you have a crop loss of 50%, your insurance will kick in. And if you go for 85% coverage level, if you have a crop loss of 85%, your insurance will kick in. So then catastrophic is if you have 100% loss. This is only available for certain products, and it's the most expensive option. Also, when you thought I was done with fancy RMA tools to click around in, there's also a tool that they have called Cost Estimator, which I think is pretty cool and pretty helpful. And so you can enter your information into that to see how much you would expect your premium to be. So here's another screenshot of how that works. I've entered in some information around an imaginary operation that raises corn in Montgomery County in Iowa, and this is a screenshot of the report that comes out at that, and it's full of a lot of numbers, so I won't dig into them all right now. But I think the most interesting piece of this is at the end it will show you a summary of your liability amount, your total premium, the amount you pay, then how much of that you pay, the producer premium amount, and then the subsidy amount. So this is a pretty useful little tool to kind of get an estimate of how much crop insurance would actually be hitting your bottom line. So clicked through all the tools. What's next? Find an agent. That's the first big step. To purchase crop insurance, you need to have an insurance agent to purchase it from. So one way to find an agent is to ask your friends in your network for recommendations. There's no requirement that your agent be located near you in order to work with you, although obviously having a face-to-face meeting has its benefits. RMA has a listing, if people use phone books anymore, it's like a phone book of crop insurance agents at their Agent Locator Tool. So you can go in there and see who is in your area. And so then once you have identified an agent, or if you want to meet with a couple agents, you set up those meetings several weeks in advance of your sales closing date. And I'm going to strongly recommend that if this is something you're interested in, start working on it now. This March 15th will be here before you know it. And like anything, getting enrolled in a new program like crop insurance is, has a learning curve. So good to start now. When you set up that first meeting, ask your agent what documentation you'll need to gather in advance of that meeting, and also consider, is your agent familiar with your farm business model? It's possible if you raise crops or livestock that are less common for your area, consider bringing educational materials about your farm and your markets to your meeting with your agent to kind of let them know, how your business works. So I've got a couple different slides here about questions to discuss with your agent. So the first thing is obviously talk about which product is going to work for your operation. And I've got that point there twice. So as you're choosing a policy, what insurance options are available for your operation? So they'll be telling you about that. Remember, Whole Farm Revenue Protection, WFRP, is available in every county. Also talk about what coverage levels are available and the estimated cost, and check it against the cost estimator. Also, you'll want to talk to your agent about reporting requirements. What reporting will be required throughout the season. They obviously don't want to sell an insurance policy based on good faith alone. They want to, know that you're holding up your end of the deal, that you're following practices that they understand. So, what reporting is going to be required throughout the season? What do you need to make sure that they know about your operation so that they'll maintain your policy? And also, get clear on what documentation is required if you experience a loss, and how quickly you have to act in order to document a loss if you experience one. Generally, the window required for documenting a loss is around 72 hours, which is a really short amount of time. So be sure to understand that as much upfront as you can. And then also, a question is, what is their timing for processing claims, and how does all of that work, and when would you expect to receive an indemnity payment if you had to file a claim? On that reporting point, most crop insurance policies require the following general types of reporting throughout the year. So before planting, you file an intended acreage report. After planting, you update that with a acreage report. And then finally, after harvest, you file a production report with them. And to, build that out a little bit more, some important deadlines to be aware of as you're going into this process. The sales closing date, which I've mentioned earlier, is the last day to apply for coverage. That's the March 15th that we're all kind of looking towards to make sure that we get there. Final planting date is the last day to plant unless you're insured for late planting. Acreage reporting date is the last day to file that acreage report that I mentioned earlier. And then date to file notice of crop damage can be one of many things, whichever is earlier. It could be after damage, the date you decide to discontinue caring for a crop, prior to the beginning of harvest, immediately if you determine that the crop is damaged after harvest begins, or the end of the insurance period, looking at whichever is earlier. Obviously talk about these with your agent to get clear on them. A couple other important deadlines. The end of the insurance period is the latest date of insurance coverage. Payment due date is the day that the last date that your premium can be paid on without them charging you interest. Cancellation date is the last day to request cancellation of a policy. Production reporting date, this is when you file those reports I mentioned earlier. And then debt termination date is refers to if for producers who don't pay their premium, the date that the AIP will terminate a policy. So many dates. Okay, so last couple things. So these are an overview of some of the types of insurance products. So, sorry, I've got livestock policies on here twice. One category of insurance products is yield-based policies. So a couple examples of this are actual production history and yield protection based on projected price. This is obviously protecting your crop yields. Then you have a different category of insurance, which is called revenue-based policies, and this is protecting against unexpected changes in revenue. And so one of these is actual revenue history is the name of the policy. And then, as I've mentioned a couple times, whole farm revenue protection. Livestock policies. There are a couple of livestock policies available also, and we did a webinar on those earlier in 2019, which you can check out on our website. And then a final category of insurance products that's available is coverages based on certain different parameters for your area. These include area risk protection insurance, group risk plan, high risk alternate coverage endorsement, margin protection for corn, rice, soybeans, and wheat. So to find out more, there's another RMA link that we'll share later. Our goals today for this webinar were to go over what is crop insurance and what it does, and then also to help you learn more about crop insurance and to decide if it's right for your operation. So I hope that we've achieved both of those goals in our presentation. And we'd like to ask you to take our survey so you can let us know what you thought of this webinar. There should be a link below the YouTube video that you're watching to go and give your feedback on the webinar. So please feel free to click and take our survey. And we are available for questions that you might have. So please feel free to reach out. This is our contact information, and we look forward to hearing from you. Thank you so much.